I want 2025 to be the year that you change your financial life forever. In this video, I'm going to go through a tried and true process that will virtually guarantee that you'll become financially independent. Okay? That seems like a pretty big promise, right? But these are financial concepts that apply no matter what. If you follow these steps, I firmly believe you'll become financially independent. 2025 is your year. Let's make it happen. So I've created this My Financial Independence Plan. It's a tool I've just created, and I want you to get access to it, okay? In order to receive access, I need you to comment on this video, My Financial Independence Plan. If you comment, I'll send you instructions for how to obtain this tool. In this tool, I walk through the 6 steps I believe are required to become financially independent. That the rich, all of them do these things. Okay, maybe to some more than others, but this isn't some get-rich-quick scheme. This is applying proper concepts, saving, investing over the long term in order to succeed financially. If you want to get rich quick, there are actually ways to do it using this strategy as well, but it involves maybe cutting your expenses, etc. Okay, so let's look at the plan. The first thing I need you to do is you have this My Financial Independence Plan tab, and on it, it walks you through the 6 steps. So you could, it's like a 3-page printout of your financial plan once you go through this, okay? So first thing you need to do is today, what is your net worth? January 1st. So come to this net worth tab, January 1st, 2025. Put in your age as of the end of this year. So how old will you be at the end of this year? 28 and 27 is my example in this case. And your expected retirement age. Expect 65, right? But as you make these plans, you'll say, wow, I can retire much sooner based on these awesome things that I'm doing because I've taken control of my financial life, right? So it gives you a projected retirement year. You could change that to 50 depending on your strategies, right? Then calculate your current net worth. How much do you have in the bank account, okay? Your emergency fund, checking, etc. In this example, I'm just saying 1,000. More than about 2/3 of Americans live paycheck to paycheck. We're doing an example of someone who is, okay? They have 1,000 saved, so they're not feeling great if emergency comes up, right? And they have 5,000 in their 401k plan. They've been putting some over the years, over the last 6 years, but not a ton. And then they bought a home a few years ago, obviously with a mortgage. So right now the mortgage has $320 left on it, but the home is valued at $367. So total assets are $373, mostly that home, right? Well, they have liabilities, they have a mortgage, so put the current mortgage balance, the interest rate, and the monthly payment, because that's going to show you how long until you're paying it off and what's your total payments, okay? And then any other investment properties in that same information, and then do your consumer debts. We have these separately because you need to pay off those consumer debts as fast as you can. And I'm going to show you some awesome strategies how to do that. So list out your consumer debts, your current balance, interest rate, and the monthly payment. Okay? So for these taxpayers, or these individuals, they have total debts of $341,000 and assets of $373. So we're looking at net worth of $31,459, which sounds, oh, that's awesome, right? Most of that's home appreciation, right? So they don't have access to that money. They only have about $6,000 in liquid net worth, so we want to improve that, right? So there's their net worth. Where are you today? I want you to do the same thing. Where am I at? Where do I want to be? Okay? The difference with this financial plan than most people do is a lot of people most people don't budget, but for those that do budget, they look at what are their expenses and they're kind of saying, okay, I'm going to have this much left over to possibly save. You're doing it backwards. We want to start with the end in mind. We're looking at our net worth. We're looking at what is our income, and we're going to budget based on what our income is, and then look at our expenses, okay? So step 2 is a tax projection. You're thinking, oh, hate taxes. Why are we doing a tax projection? Taxes are going to be one of the biggest expenses you'll have for your entire life, so you need to figure out how to save on tax, right? I'm a tax professor. That's why this is one of the most important steps, and a lot of people skip this because they just don't understand it. It's too complicated. That's why I made this tool. It gives you a pretty darn accurate tax projection, okay, of what your tax liability will be in 2025. I have all the numbers built in, 2025 numbers. So, simple tax projection. Put your income, your spouse's income, any business income you expect to have, household status, your filing status, and dependents, okay? So just based on that information, using the standard deduction, and on the tax projection tab, you can put in more detail. Okay, any of these blue boxes you can come in and change. I have interest income, etc., etc. You come in and make those changes, get it more accurate. Okay, but just with that initial information, state of Utah, federal, state, Social Security, and Medicare, you're paying almost $12,000 in tax. Okay, see how people don't consider that a lot of times? They're like, oh my gosh, I was making 80, you only have 68,000 to work with. Okay, that's why we're starting with the end in mind. I have $68,000. That seems like a lot. It's amazing how easy it is to spend all of that. Okay, so starting with 68,000, how are we going to begin with the end in mind? We're going to create an annual budget. Okay, based on that income level, and I'm going to give you some recommended goals that I feel are important to be successful, but also to bring you happiness in your life. And that happiness in your life speaks to the first one, which is charitable. Get used to giving to charity, even if you're living paycheck to paycheck. Putting others before yourself will bring you happiness in this life. If you're always putting yourself first and leaving a little bit for others, then you're not going to find happiness because you're only thinking about yourself. Have a budget line item for charitable. I put 10% on there. I'm a religious person, so I'm doing 10%. Okay, you can do whatever you want. Okay, but that's a recommendation. Even if you're not giving to a church, giving to any charity, giving to someone, a homeless person on the street, if you're getting used to giving, you're going to carry that same habit throughout your life, and when you're wealthy, you'll be able to give so much more, and it'll just be natural to you. Okay, so charitable, 10%. Okay, and I did that after Social Security, Medicare, and retirement contributions in this case. Already built into the budget. I'm going to show you how to adjust it to what you want to give. Emergency fund, start with $1,000. That's like a Dave Ramsey thing. Just get $1,000 and then look at paying off debt, etc. Okay, so they only have $1,000 in their account, so we're going to do an extra $1,000. Okay, in a specific emergency fund that they're going to budget. Another important principle: debt. Okay, if you've ever read any finance books, there's different percentages that people recommend. One of my favorite finance books is The Richest Man in Babylon. 10% to savings, 20% to debt, 70% to expenses. Okay, so 20% to debt, I'm just using that as a rule of thumb here. 20% of that 68,000. So you would pay 13,611 towards your debt. I'm going to show you how to do that right now. On that net worth tab, remember over here it says change it on the net worth tab. There's your monthly payments. You're paying $451 a month towards your debt. That is not enough to meet that goal, right? So I have this payment override column. The cool thing about this column, what you do is the recommended total monthly is $1,134. That's that 13,000 divided by 12. So we want to divide that between each of our debts. There's different methods of debt payoff. You have the debt snowball, the debt avalanche. You can use whatever method you want. I like paying off the highest percentage first. Look at that. Credit cards have ridiculous interest rates, okay? Like your credit card, your balance is $6,300. In 3 years, to pay it off, you're going to be paying $8,600. An extra $2,300 over a 3-year period. No wonder people can't save, because they're in tons of credit card debt, and they, instead of earning compound interest, they're paying it. They're making the credit card companies rich. Pay 20% to your debt, get rid of all of it, so you're not doing that, okay? So for that credit card, let's almost triple that payment. Let's do $600 a month. That credit card debt is gone in 1 year, okay? And we're just going to go to that 20% goal, okay? We still have 534 left over. Let's pay off our auto loan. 300. That puts you at about 1.5 years to pay off that auto loan, okay? And we still have 234 left over. We're going to put towards the student loan. To hit that $1,134 a month, how much will that save us over the term? That student loan went from a 10-year payoff to a 4-year payoff, okay? And if we just did that 20%, all of this debt's going to be paid off in less than 2 years, okay? Because next year we're going to put that 600 plus more to the student loan and it's gone, okay? How much money will that save us in the long run? Even just by doing that 1 year, we saved $4,300. We're going to save even more by applying those principles. Pay off that debt, that consumer debt quick. Mortgage, a lot of times you don't have to do it as fast, but if you're in the habit, you could put more towards the mortgage. You're 27 years, maybe next year you want to put an extra, it's $1,785. If you could afford $2,300 a month towards the mortgage, all of a sudden you've saved $110,000, okay, by making these additional payments and interest. So you can adjust your debts there. So now we've hit our debt goal already. So we've planned in our emergency fund, our debt goal, save and invest. Now this is the fun part because I'm a tax guy. I love this part where you can expedite your savings by understanding tax strategies. Watch my video on the HSA account, how that's my favorite retirement savings account. I'm going to show you one, the 401k match, that you can't afford to miss this. This is the greatest return on investment you can find, really. Okay, so let's go to the tax projection tab. In this tab, we already have some overrides from the financial independence plan. Okay, but we're going to scroll down, and we're assuming this individual has a 401k match with their employer. What that means is every dollar you save for retirement, your employer is going to put in $1. There's different structures to that, but that's kind of the concept. They're going to match whatever you contribute to a certain percentage. In this case, which is about average, is an employer will match 4 to 5%. So 5% of every dollar you put in, they'll match $1 up to 5% of your income. So you want to get to that match max. If you're under that, you need to prioritize getting to it because I'm going to show you the return that you're getting. So we're just going to do the 5%. So we're going to take his income of $80,000, multiply it by that 5%. The goal for this couple is to save $4,000. Okay? If they can save $4,000 in a 401k, what effect does that have on their tax liability? They're saving $714 in tax. If you put that money into a traditional account, I always, in order for traditional to potentially be better than Roth, you need to invest that tax savings. So I like to calculate that and say, okay, I'm putting whatever tax savings I got into my Roth IRA. Okay, and you can increase these amounts as time goes on, or you could put it in Roth. The thing with Roth is you don't get the tax savings up front, but there's different projections that you'll want to run. I'm not going to do all of those in this video, but there's a lot of possibilities you can do with this calculator, okay? Test Roth versus traditional and how much you'll accumulate, and et cetera, okay? So, in this case, you only invested $4,000. How is that? Well, because you put $4,000 in the traditional, you save $714 in taxes, and you just put that in a Roth, so it only cost you $4,000. Yet, your return on investment, you end up with $8,714. So you got 118% return on your investment by getting that employer match. They're giving you $4,000 plus the tax savings of $714. Okay, so what effect does that have? We've applied just one very simple tax strategy, or two. We got the employer match and we invested the rest into a Roth IRA where we're getting tax-free growth. What effect does that have on our accumulation? Step 4 is we need to plan out how fast are we going to accumulate money. You're going to hit $100,000 in 2 years. Okay? Where does that come from? On this accumulation tab, to hit that $100,000, we have $32,000 taxed for $2,000 tax free, and we got some home appreciation plus mortgage pay down. So we're already worth $100,000. Look how fast we hit $1 million. When you're 49, how many 49-year-olds wish they had done this? They'd be millionaires right now, okay? And many of you are, okay? But if you're not, this is how you can get there. And that comes from some real estate appreciation, mortgage pay down, and then you're building up these accounts. You're a millionaire in just 21 years. And how much did you save? You saved $4,000 per year. This is projecting that same savings per year, and you're a millionaire in 21 years by saving that much. How is that possible? This stuff's crazy, and you can do it. It's not that hard. $4,000. That's why we're starting with beginning and the end in mind. When you see that if you saved $4,000, you could become a millionaire in 21 years. Who's not going to do that? So how are we going to do that? We've got to make that budget now. Okay, so we've applied those strategies. When you retire, you're going to have $3 million. Okay, crazy. So let's look at the budget, because there's our projection. We're pumped now. We're like, and look at our savings goals. Our savings goals up to 14%. In Babylon, remember, richest man in Babylon said 10%, but we're hitting 14 because we're doing these extra tax strategies. We're paying off our debt quick, and once that debt's paid off, think of how much you could put that 13 grand that's gone now, the debt after 2 years, you put that to savings. That's where we're talking early retirement real quick, okay? You can do this. Let's look at the budget now. Okay, so now that we've made those adjustments, on this budget tab, based on your savings goals, I've created a budget for you, okay? So, and it's based on the Bureau of Labor Statistics, the average American, what they're spending, but I've adjusted those expenses. Like, since you want to save $9,000 this year, we've got to change your expenses. And look, you're in the positive, $378. and you're still paying off that $13,000 in your debt, okay? But here's your expenses. These are the recommended expenses for you to hit that goal. I have that charitable in there. I have it all in here. But now, are those your actual expenses? Most likely not. So now you need to come in and say, I have my goal. I want to save $9,000. How can I make that happen? Okay? And actually the goal, what was our goal? 9,714. So we're under our goal. We need to make adjustments to hit our goal. What's going to hurt us? Well, that house payment was pretty high, right? $1,785. So we need to change that because the recommended is below that. So recommended, so if we do $1,785 and we're working on an annual basis times 12 because we're looking, how much do we want to save over the year? Look how far down our savings just went. Okay? So because our house payment's high, we're going to have to adjust. We're $5,500 over budget. You got to go through and adjust, put all of your expenses in here first and see how far off are you from your goal of only saving $4,000 but paying off a crud load of debt, right? But how far off are you? Then you have to come through. So you should have numbers in every one of these, okay? So you'll have all of these, but I'm just going to assume the ones I gave you are the ones you have right now. Now I'm going to make adjustments, okay? You can see the one I'm not going to touch is that charitable. I'm like, man, I'm going to pay that if it's the last thing I do, okay? I'm going to find a way. I'm going to cut. Look, my groceries, oh, they're actually a little higher. I was at $3,500, but I'm going to save in other places, right? Fast food, we're going to, this year, to become financially secure, maybe next year after we've paid, in the next 2 years when we've paid off our debt, we can have a little more leeway, but 2025 is your year. This is crucial that you start this and you go crazy. And so we're going to do food away from home, 1,000, okay? And we're going to do personal services, 1,000. We're just decreasing. Where are we going to cut? You're looking at areas, household furnishings and equipment. We are going to spend $500 on that. We are cutting big time. Apparel and services, clothes, we're going to get them at Walmart, DI, Goodwill. They have great clothes there. We're gonna swallow our pride and get some cheaper clothes. And look, we're only 1,000. Just those few expenses we've changed, we're only 1,000 away. Entertainment, we're going to do a lot of free stuff. It's usually funner than the paid stuff anyway. We're going down to 1,000. Okay? $581. Let's do this. Education. Oh, this is an easy one. We're out of school. Boom. 0 on education. Tobacco. I'm not a smoker. $775. We are literally $225 away. Where else can we adjust? Okay, so you're going through gas. We're going to drive a little less, $1,200. Boom, we're over our goal, $99.26. We have adjusted our expenses. We found, and these have to be realistic. If you're way over on these, you're going to fail in the first month and you're going to be like, I give up. Be realistic, but this is your time. You can set these goals. You can have $3 million by saving $4,000 a month. I mean, $4,000 a year with the employer match. There's so many cool things you can do. Make it happen. Do that annual budget. Sit down with your spouse and say, let's change our lives. In 3 years, we're going to have $100,000. It's called coast fire, which is once you've saved enough in your investment accounts where you could stop saving for the rest of your career and you could live on those investments if they grow to a certain number, that changes your life. All of a sudden, you're a lot less worried about losing your job and having to find a new one, because if you can cover your expenses, your investments are going to grow to what you need. You can reach that so fast by applying these strategies, okay? So you have your annual budget. Now, so you've made the plan with your spouse or whoever you need. You found, I am going to hit this goal, okay? That's my yearly goal. How do you make it happen? You need to track your expenses. You need to hold each other accountable. And I've provided this for you. Every month, I have a month tab. 2025, this is your year. You're going to start in January, and you're going to track your transactions. This monthly budget is based on your annual budget, okay? You can actually come in and change some of the budget items if you want. I highly suggest that you don't, because you hit that annual, right? You know what your goal is. You need to save $827 a month to hit your goal, and a lot of that's coming from that 401k and the match, right? But what you're going to do is log into your online bank account and copy all of the transactions into column I and J. Don't copy them into H, because that's where you're classifying them. So put all your transactions in I and J, and I just did an example on the side, so I'm just going to copy these over. In the category, let's say that first one was paycheck, whatever it is, the and 5193 was the total for the month. Let's say we had that. You need to come categorize it, and once you categorize it as a paycheck, you'll see these numbers change, right? 5193, we hit our budget. If we were 5194, we're still green. We're $1 above budget. If we're 5192, we're below budget. So this is automated. All you have to do is put in your transactions, and it's going to tell you whether you're on budget or not. Okay, so budget, what's your actual, and what's available. Okay, so if I copy all of these, I'm just doing this as an example. These are all your transactions for the month. You'll likely have a lot more because I just did totals for each category. So you'll have you can see you'll put tons and tons of transactions, and they'll all add up to hit your goal, right? And based on what we have here, gosh, we're 121 short. We're over for the month. And our pay, let's adjust the pay. So our pay's on 5193, and then let's put the contributions from the employer are pretty much automated, so 333 each. And let's just make it so we're on budget for the first month, so we're feeling good. We're 96 over, so what did we overpay on? Grocery store, let's just adjust that to 230. You went hard the first month, and we're still over. You're doing your actual transactions, and in this case, we're 66 over. I'm just going to change. We want to be on for our first month. Okay, so we're just going to say entertainment. We spent $0 that first month, and we're $7 over. Okay, we're on track. And you can see it each month. You'll be able to check whether you're on track or not based on your transactions, and you'll see, okay, we're over on one thing, we better cut on another, right? So, and so on and so forth. Once you've done that, so for the month of January, you need to come to your budget, annual budget every month, and you can see it auto-fills the month. It says January, once you filled it out, it's complete, and it shows your savings goal. And based on how much you saved that month, it gives you an annual projection. Because we were $7 over, we're on track to be $82 over for the whole year. And you can see in our projection where we're on and where we're off budget, okay? Every month that you complete, it'll change your annual projection based on those 2 months. So it's going to take an average. If 3 months are done, it's going to take an average of those 3 months and convert it to an annual projection, okay? This is how you're going to hit your goal. And you put the rubber to the road. This isn't, okay, maybe we'll hit the goal. This is, we have what our goal is, and we are making it happen by tracking our expenses, and we're working together as a team. If you're on your own, you're holding yourself accountable with this sheet to be able to hit your goal. If you do this, you have the roadmap to be a millionaire. It's just saving $4,000 a year. People don't realize that. The many ways, and I have tons of videos on these other tax strategies, the HSA, 401k match. Look at my channel and the other videos where you can see how to maximize those savings, right? Once that debt's paid off, you can do a lot of cool things in order to become financially independent at a super fast rate. There's your example. Each of you, I hope you'll do it. 2025, this is your year. You're going to change your financial life forever, and here's the process. You follow this. The last step was the retirement plan. If you go through, and if you're older, I have retirement planning with required minimum distributions, your tax in retirement. All of these things are in the retirement tab as well. But I wanted to concentrate on those that are, you're at 0 right now. Let's make you financially independent. If you found this helpful, please like the video, subscribe to the channel, share this with someone who could use it. I know all of us know people that could use it. We don't have to be forward and say, oh, you really need this. You can say, look, I'm going to use this. This applies to everyone. If you have money or not, planning is so important. So please share it with those that would be interested. If you want access to this My Financial Independence Plan that I've created, you need to comment below the video to get access to it. I've given the earlier version for free. The 2024 version you can find on my website, but this version has a lot more power. And so, yeah, comment on the video if you want access to it, and have a good one.